Hello everyone, welcome back to the channel and hope you guys are doing great. So in my today's video, I'm going to discuss the Q4 FY26 and the full year results of Borosil Renewable Limited. And we'll go through their con call summary and I'll discuss the most important points. So if you look at this business, right? So the Borosil Renewable, they manufacture these solar glasses which are put on the rooftop solar panels. So that is their main business in short, right? So let's look into their results. So if you see for the Q4 FY26, the YOY revenue increased by almost 18% to 440 crores, and PAT was up by almost 941% to 169 2 crores. Earlier, last year, they had made a loss of around 30 crores. So that's why the huge jump in profit. And if you look at the for the full year result also, the revenue did not grow that much, which is only around 5.38% to 1,556 crores. And PAT was up by almost around 493% to 127 crore. Last year, they made a loss of around 87 crores and EBITDA margin almost double, how to say, from 16% last year to 32% last year. And one of the major reason, right, the margins improved because the selling price for these glasses raised, the prices increased from 113.44 last year to 146.7 last year. It's almost, you know, an increase of almost close to around 20 to 30%. And this is not because something changed in the market or the operational efficiency improved or anything with the business. So what the management said, what has happened, right? Because the capacity in India to produce the solar glasses are not that much. So a lot of these import happens from China and Vietnam, right? And then they sell this product at a very low cost. So what and at the back of this, they had to reduce their prices and it had impacted the overall profitability. So what happened in December 2024, right? The Indian government introduced these anti-dumping duties for the solar glass imports, because of which the prices increase, and at the back of which Borosil Renewable also could increase their prices, and due to which the EBITDA margins increase. But here we need to be careful, right? Even though they are running their business, they are not able to decide the price. The price or of their product is dependent upon how the government tackles these imports, right? So because of these anti-dumping duties, it was profitable to the business. If this goes out in the future, this could create another problem. So let's see how does this pan out. And if you look from the geopolitical issues, the questions that were asked, so the management said, right, they require a lot of fuel, to run their furnaces on a day-to-day basis. So they said the fuel of imported gas almost more than doubled, and prices of furnace oil also improved almost 50%. What the company did, right? They imposed a fuel surcharge on their products, so due to which the impact of this increase in fuel prices was not that much. It was very less. And at the same time, what they're saying, because the situation is still continuing, they're going to continue this surcharge in Q1 of FY27 also, and they hope that things stabilizes and things come back to normal. And what other thing that they have said, that because of this geopolitical issue, they have not seen very high cost pressure, so everything looks fine. At the same time, even though the prices increased for the fuel and everything, the management said that their factory did not shut down even for a single hour, so there was no operational loss at all. And the other thing which the management updated was on the the multiple government duties which they have imposed on Malaysia. So in for Malaysia, the imports from Malaysia which comes, right, so the Indian government has imposed countervailing duties which is going to expire in 8 June of 2026. So this could be a problem for the company if this expires. But what the management is saying, right, that the government is planning to extend these duties for another 5 years, and they expect the release of these duties before the expiry of this duty. Let's see how this plans out, because if it doesn't work and if the government does not put this countervailing duty, it could again have an impact on the overall profitability of the business. And the other thing is, like, because of these anti-dumping duties which I spoke earlier, which the government imposed on China and Vietnam, right? That was very helpful for the company in terms of improving the overall profitability realization. So what the biggest problem I see with the business is, it's not like what they manufacture or what they sell. the biggest problem is the import from these, from Malaysia, China, and Vietnam, right? Because China, we will very know the way they have their production capacity, they can sell this product at a very low cost. This solar glass at a very low cost in India. But because of this anti-dumping duties which the government has imposed right now, the company is protected and they're able to increase their prices. But the point is, we don't know when these duties will be removed, and if it is removed, what is going to be the impact. Till the time India does not become self-sufficient in providing the overall demand which is there in India, we will always have this problem, especially for these companies like that. So yeah, we anyone who's trying to invest in this business needs to keep an eye on that, right? So no matter how well how what the business is doing, if these duties from the government change and it goes against the company, then it could be a big problem. And if you look from the growth, right? So what they're trying to do, they're doing this major capex where they are building up two new furnaces, and they each have a capacity of around 300 tons per day. And once this is up and running, it will increase the overall capacity by 60%. So the management is saying that you know, these furnaces should start running by end of Q4 of FY27. So there is no change in that as of now, and they will start contributing to the overall PNL, properly only in the year of FY28. So nothing much has changed from the last con call. So it still remains the same. What the other thing that they are trying to do is, right, they are entering into a new business segment called as, where they are selling Borosil branded rooftops or solar solutions. So earlier they were just manufacturing these solar glasses. Now they are trying to sell rooftop solar solutions also. Over here, they're not going to manufacture these product. What they're going to outsource it. So it's going to be like an asset light model. So they will get these three items called solar module, inverter, and battery. Once they get it, they will label it under Borosil, and then they will sell it. Then they will sell it in the market. So that's what they're trying to do and enter this new market space. What they're saying that after 1 year, if everything goes well, then they will start looking at manufacturing only the inverter, but not the solar module and the battery part of the section. And as of now, this business is slightly started, and their target for FY27 from this business is around 75 crore in the revenue, which is not going to make a much difference, because if you look at the overall revenue which they have for what, around close to 1500 crores, it doesn't even come to around 10%, 10% of it. So, but let's see if they are able to do this business quite well, and whether they are able to expand it or not. So these are the two things that they are doing to to grow and to expand. But the only meaningful contribution will come from these two furnaces, which once they're up and running, because it will increase their capacity by 60% from these new their rooftop solar solutions. We have to wait and see how does it progresses. And in terms of guidance, if you see, right, the management has not given any guidance. And if you actually look the way the business is going, and they're running at almost currently full capacity, and then you know, their new capacity will not come up till the end of Q4 FY27. I personally see that their overall for the whole year growth will not be, I mean, will be in single digits, would be in a higher single digit, not more than that. And in terms of EBITDA margin guidance, they said that they'll be able to maintain the EBITDA margin at around 30 to 33%. Obviously, this will be maintained only if these countervailing duties and anti-dumping duties, which is imposed by the government of India, continues. If anything changes adversely over there, it could be a big impact. So, in short, if I see, the business is highly dependent upon in the rules and regulations by the government on the import of these solar glass panels. And if till the time the things are in favor, the business will do well. But if anything goes against it, that could be a problem. I think the only thing that can help this company is, right, these two new furnaces coming up and increasing the overall capacity. So let's see how well they do, and whether they are able to continue, whether they're able to complete this. Because if they do not do that, I think it's going to be a big problem for the company. And if you like this video, please do hit like and subscribe to my channel. Thank you and God bless.